Right. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right. Welcome to the main event. Well, hope you guys had a good lunch. Mine was okay. So, kind of interesting. There before we left, we were getting some pushing, and I had bought at 27.5, and it didn't really go, and I didn't really know what it was doing, so I took it off. But then we did get a little bit of a stop run up to the 30 here. But it immediately fell back down. So there's actually some guys. It looks like there's a couple of orders buying it here on the way back. Um, but they failed it. They actually went as low as 25.5 at one point before, coming back up here. So it's balanced at the moment. Also, I have been seeing some orders going through, and overall today it looks like most of the volume has been flattening. So maybe some people taking some bets, thinking that the Fed is indeed going to be hawkish. Also, mortgage refinancings collapse most in 6 years despite falling rates. Another headline out there. That was about 16 minutes ago. Anyways, how are you guys doing? I'm showing the right thing here? Yes, we are. Okay. Can we see? All right, that's all good. We do that. Cool. Okay, well, there's still a decent amount on the DOM here 15 minutes before, so I don't know. Sometimes with these kinds of events, they pull super, super early. Probably 5 minutes before they will definitely pull, but I guess some liquidity did pull at about 15 minutes too, because it was a little bit thicker than that. There was some 5Ks on there and stuff. Well, they seem pretty balanced at 27.5. A lot of volume there too. I remember back when we were down here at 21.5, and that felt like it was a lot of volume and it was going back and forth there a lot. Double distribution day. Oh, bird, why? Why you have to be like this? Why are you squawking? Oh, here, somebody sent me a message about my order. Sweet. They fixed it. I ordered something on eBay and it didn't ask me for the address or anywhere that I saw. And then when it showed me the confirmation, it was the wrong address, and I'm like, crap. So I contacted the seller, but it looks like he fixed it. So I am happy. Things going well so far. Yeah. Forex Live putting up the previous statement for reference. By the way, do we get anything big? Well, there's a lot of big targets way below us. And there's a couple of big targets way above us as well. Hmm. Now let's fix the ZB here. The ZB just kind of been like that today. Even he's been all over the place. Bitcoin also pushing. They just want to buy it. And look at the change in the 5-year though. It is changing. Hello, Lucas. Bots pointing out a couple of past FOMC levels. How to show seconds in the Windows 10 taskbar clock. We have to do a reg edit. Let's do it. Let's edit our register just before, while we're streaming, just before an FOMC meeting. Okay, current user, software Microsoft. Windows Current version. Explorer. Advanced. Oh, I would have to sign out and sign back in. Well, that sucks. We're not going to do that. We're not going to do that. Reset volume? Mm-hmm. Oh, Lucas saying that he didn't trade, but he saw the live stream and came in. Yeah, well, you don't want to miss the FOMC, man. Come on. I'm surprised that they're back down to 260, though. Yeah, let's clear the current trades, huh? We'll do it on all of them. Are we looking for a trade here? Maybe. So usually when FOMC happens, it is a little bit too volatile. But sometimes it gives us good trades. So we're just kind of gonna watch and maybe see if there's something. Maybe there's something here. Maybe there's not. I'm kind of suspicious though that they're gonna sell it. So there's kind of this step here. If they return down into the previous area, I think that we could not only move through the 21.5, but then probably into the previous days at 16.5 as well. And if we don't, if we move higher, well, there's no telling where it's going to go. If we go higher, we got this big, huge spike above us. So that would be pretty, yeah. No way to know how far it goes, sort of a thing. All right, 2 minutes. One minute. It just seems eerily quiet to me here at this moment, but I'm sitting here and I'm like, okay, so there's the pull seconds before. Okay, a little trickle of volume there. Okay, they are buying it. Holds interest rates in range as expected. obviously what we expected. We're going to have to wait and see if there was any significant changes in the statement. This is something that might not move um, where it's going to go right away. Definitely some real volume there. Long though. Okay. And a quick sell. Do you think I could stick that in there maybe? Actually, it would want to be like that one. There you go. Okay. Lot trading at 28.5. Okay. Buying. Okay, here I'm seeing tweets about this statement now. I will read it. Information received since the Federal Open Market Committee met in March indicates that the labor market remains strong and that the economic activity rose at a solid rate. Jobs gains have been solid on average in recent months, and the unemployment rate has remained low. Growth, well, moved up there. Growth of household spending and business fixed investment. Let's cancel this because I don't think that one's happening. 124. Kind of showing me something, maybe. Hold on. Nope. Oh, yes. I don't want that. Okay. Oh no, what's with the 23 at 03? Not good. Not good. That sucked. Well, just hold. On balance, market-based measures of inflation compensation have remained low in recent months, and survey-based measures of longer-term inflation expectations are little changed. Consistent with its statutory mandate, the committee seeks to foster maximum employment and price stability. In support of these goals, the committee decided to maintain the target range for the federal funds rate. The committee continues to view sustained expansion of economic activity, strong labor market conditions, and inflation near the committee's symmetric 2% objective as the most likely outcomes. In light of global economic and financial developments and muted inflation measures, the committee will be patient as it determines what future adjustments to the target range for the federal funds rate may be appropriate to support these outcomes. In determining timing and size of future adjustments to the target range, the committee will assess realized and expected economic conditions relative to its maximum employment objective and its symmetric 2% inflation objective. This assessment will take into account a wide range of information. Blah, 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 blah. So I don't see anything like huge in there. Just kind of sounds like pretty standard out. We're going to be patient sort of a thing. Okay. E-mini looks happy. Okay. Okay. A little bit absorbed there, but I don't know. Well, there were a couple of trades there. Yeah. Quite a bit of a move. We could have, when it was going, we could have taken it, but um, while people are digesting the statement, because it takes a little bit, it's hard to know what they're actually going to do. Okay, so they busted through a little bit of volume there. Okay, let's put this up here just in case. something crazy happens, right? Man, some of those offers are pulling now too. You see that? Yeah. So this is difficult. This could just like um blow up really quickly, or it could fall. I mean, it's this is really difficult to know because it's a buy. So far it's been a buy. It's extremely difficult to know how far it's going to go because we've got, oh man, it's so far up there, you know? But we do have targets on the DOM. Okay. A little drop there in the 5 year. Well, that was disappointing. So the actual volume that we're getting at the moment, 5 minutes after the thing, after the release, not quite as high as I would expect, especially considering how important I felt that this FOMC meeting was. Now, part of this may be that people are looking forward to the press conference, but I do think there's probably some room to move up still. Kind of looks like they're toying with us here. They did stop a little bit higher there when they came back that time, but the 5 year was definitely the one that fell. Okay. Yeah, on that tick up, there was some stops at 02. Yeah, Peter's got to be happy if he kept that position open. Holy crap. I wouldn't have. There's no way I would keep something open through FOMC, even a mm, even a swing trade. You're crazy, bro. Yeah, John mentioning the ZB maybe hunting 16. There's definitely a big order up there. Okay. There is quite a bit of volume now trading at 20, or sorry, 02. 29 in the 5 years not pulling or anything yet. They're not really trading into it yet either. Somebody hit that. Somebody hit that. Mm, still nothing yet. Still no. We're getting a little bit of an ascending triangle here. An ascending triangle is usually good for long, but they're not going there. See that? You see that? No, don't buy into 124 even. Oh, man. Mm-hmm. Should I have taken the 3 ticks? I'm just surprised that I didn't get. Well, I could have gotten 4, couldn't I? But the scenario that I have laid out here is not what's happening. Now I am seeing some steepeners coming through. Okay. It's just that um, wall at 29. It looks like an ascending triangle to me. Hmm. When they buy it up, there's a lot more. Well, I guess there was a little bit of chaos when it came down. It came down pretty quickly, didn't it? But when we're ticking up, we're kind of seeing some stops and fighting, and it gets a little exciting. Okay. Hmm. Okay, that was bad. So there was an iceberg at 1 that held, and then something. I think it might have been a robot sold O5 there. Took it off her. Yeah. Okay. There's still some leaning here. You'd be happy for 3 ticks. Well, so I normally go for 4. That's kind of the thing. I don't know. I just wasn't until that happened there. And man, I really thought that they were going to test that big order harder than that. But they did just tick down there. Wasn't a good sign. And now it's kind of quieting down. And look, as they're selling into it, it's kind of holding them. Only the opening paragraph changed. Yeah, that's right. I noticed as I was reading it, this opening paragraph seems very different. Hmm. See, it's curious, even though we did have a buy, they don't appear to me to be trying to make any kind of big move at the moment. It's just kind of moving around. Okay, well that O5 pulled. Okay. Hmm. And then that 124 pulled. So now we're in a crappy area. He's a Dom swing trader, could be. We do have an imbalance there, don't we? They sold that. I'm not sure if he's getting a lot for his effort. They aren't hitting 01 though. Okay, well there they took it and some pulling. Okay, let's see now that 29. Are they gonna jump? Are they gonna blow through that 29 this time? Okay. Come on, somebody hit it. Ah, it pulled. Okay. Now I'm seeing a lot of orders stack up at 03 half. I am seeing steepening. I also see that ZB wants this 16, but ZB is going to get the most selling. So if we do actually get a move up, there could be a lot more room in this if ZB is actually going to get to 16. I'd be happy with 32 ticks. Yes. Okay, well, 29 did go bid, and pretty easily, I would say, as well. So, and not only that, but the bid appears to be absorbing as well. So it's probably going to be really messy, but they are giving some hints that maybe the 5-year is going to break out here. Okay, that's funny. They're only sticking 2 on it and forcing them to buy 2 and 3 at a time. Okay. Wow. Stop run. That was a stop run. And did you see that the orders that we had sitting on here at the high, some of that pulled as we ticked up? Those were both 6. I'm pretty sure those were both 6. Let's zoom in on it. You see it pull? Do you see how it's dark right there? That's a really bullish sign. It's rare that you see that much liquidity at a high, like just pull straight up. Now we kind of need the 30-year to start coming along, don't we? Well, it's gotten slow again. E-mini's doing its own thing, by the way. Well, it's hard call. How far is it going to go? That's the difficult thing here. Well, we should at least do that, right? Okay. Strong uptick. And they're kind of nibbling at it, but they're still taking their time. Oh, there you go. Whew. Okay. Now some reloading at 03 half. Okay, so this one at 04. Ooh, there's a real reloading at 03 half, in fact. But they did fall there. That was a big iceberg up at the top, though. Like that is it's been so interesting. When we're at the high and I see one tick below the high, a big iceberg, especially 7K is a lot of contracts, right? 7K buying at 03 half, that is a sign of strength, especially when we are trending, which at the moment we are doing. But for this past week, and really even longer than that, I would say, um, that has been failing over and over and over again. So that's a little curious. It seems to me like we fell down there a little bit too easily. And they did not really give me any kind of a clear, you know, okay, we're done. Hmm. There are a few orders coming in and selling it though. Sell it, and then when it ticks down, there's a bunch that immediately come in and buy it. Well, hmm, curious. Curve steepening quite a bit. Yes, it is. Um, but it's pulling back quite a bit on these too. I think for scalping, this is a difficult move because, um, I mean, I had it right, but I'm not seeing the exits at all. It's just kind of coming out of nowhere, really. Hmm. U.S. China trade deal is possible by next Friday, says CNBC's Force. The politically correct Fed is worth another 20 S&P points. You're so funny. Well, they have messed around in this range quite a bit. There was some real stops up there, but sometimes those stops is a sign that it's done, right? Okay. So now they're doing it again. When they tick up, those offers pull completely out of the way. Having a right and making money are totally different things. Yeah, rotations are right. Yeah, so it's just so there's a couple of things that I'll look to see that it's ending. One of them would be um the offer stacking and iceberging. One of them would be a strong tick down and then, you know, possibly people getting out. I guess there was kind of that at '03, but it came back down so quickly. So I'm not really seeing where the rotations are. You know, like at the moment, I think that we're getting a long rotation. I mean, they did tick up too there, right? And offers are pulling. But when is that rotation done? That's the big question. And the market behavior, the moment, feels very different to me for some reason. That's kind of the hard thing is I think smash the bid is right that um, being able to tell that we're in a buy trend or a sell trend is only half the battle, right? Because you still have to know the spot. Well, it's going back and forth here a lot. At 0.5, rotating around 0.5. I guess one thing that might have been a sign here, and I've never really seen anything like this before, but look at the liquidity up at the top there. They pulled, they moved it up, and then they moved it back down, creating like this kind of house, this kind of roof over the top. I don't think I've ever seen anything like that before. I think that those were profit taking targets that never got hit, but could be wrong. 5 year is kind of, well, let's reset this. Wow, look at that. Okay, you see all that volume that went into O2 on the stop? That was very interesting. Hmm. Hmm. Okay, so they just ticked up their to 025. Now, this is the thing that I think is so weird is that, like, look, it's only taking 500, like at O2, it only took 520 to clear. So those offers are totally pulling on those up moves. Okay, E-mini is in a little bit of a pullback. That might have something to do with the move up. And then that just pulls. The 29.25 is not doing it. And 29 was where we had trouble before, right? This is the conference start now. Well, let's make sure I'm not missing something. Okay. Aggressive upticks.
Goal.
Here
To
we
use
are.
our monetary
Okay, he is
policy
talking.
tools to sustain the economic
I forgot that it
expansion
starts at
with a
the
strong job market and stable
half
prices
hour, not the
for the benefit of the American people.
top of the hour.
Incoming data since our last meeting in March have
Can
been
you guys hear it
broadly
now,
in line with
by
our
the way?
expectations.
Or is it still you don't hear anything in the
Economic
background?
growth and job creation have both been a bit stronger than we anticipated, while inflation has been somewhat weaker. Overall, the economy continues on a healthy path, and the committee believes that the current stance of policy is appropriate. The committee also believes that solid underlying fundamentals are supporting the economy, including accommodative financial conditions, high employment and job
Says
growth,
it's loud, but okay.
rising
All right.
wages, and strong consumer and business sentiment. Job gains rebounded in
01?
March after a weak reading in February and averaged 180,000 per month in the first quarter, well above the pace needed to absorb new entrants to the labor force. Although first quarter GDP rose more than most forecasters had expected, growth in private consumption and business fixed investment slowed. Recent data suggests that these two components will bounce back, supporting our expectation of healthy GDP growth over the rest of the year. The committee is strongly committed to our symmetric 2% inflation objective. For much of this long expansion, inflation
Strongly
ran below
committed to
our
their
2%
2% symmetric
alongside
inflation
considerable
objective.
slack in resource utilization.
That's dovish.
But last year, with the unemployment rate at or below 4%, inflation moved up.
Yeah, but I like to have it when I watch it later because we need to be able to see it. When he said something, what was the reaction, right? I'll turn it down a little bit, though.
Overall inflation
How about that?
from a few tenths above 2% to a few tenths below over this period, with the moves mostly changes in energy prices. As expected, overall inflation fell at the start of this year as earlier oil price declines worked through the system. Overall inflation
We're done.
was 1.5%.
We're done.
Core inflation unexpectedly fell as well, however, and as of March stood at 1.6% for the previous 12 months. We suspect that some transitory factors may be at work. Thus, our baseline view remains that with a strong job market and continued growth, inflation will return to 2% over time and then be roughly symmetric around our longer-term objective. At the start of the year, a number of cross-currents presented.
So why is it doing this now?
Including weak global growth, particularly in China and Europe, the possibility of a disruptive Brexit, and uncertainty around unresolved trade negotiations. While concerns remain in all of these areas, it appears that risks have moderated somewhat. Global financial conditions have eased, supported in
Crumble Stiltskin. Yeah, that really messed up.
And in some cases, fiscal policy.
A lot of volume.
Europe shows some improvement, and the prospect of a disorderly Brexit has been pushed off for now. Further, there are reports of progress in the trade talks between the United States and China. The committee views these developments, along with the outlook for continued growth, a strong job market, and muted inflation pressures, as consistent with continued patience in assessing further adjustments in monetary policy.
Continued patience. Okay, so there's the spot right here.
Consequential decisions about our balance sheet. In January, we decided to continue implementing monetary policy using our current policy regime, which involves...
Well, look at this liquidity showing up at 28.
In March, we decided to slow the pace of balance
They took that one out.
this month and to cease runoff entirely in September. These plans support our longer-run dual mandate objectives and also provide clarity about the path of our asset holdings. Today, we had a preliminary discussion about the longer-run maturity composition
Wow.
of the portfolio.
Okay.
Before the financial crisis, our portfolio was weighted toward shorter-term debt of the federal government. In the wake of the crisis, the Fed bought a large amount of longer-term securities with the aim of lowering longer-term interest rates and thus supporting the recovery.
So these prices are absorbing. So somebody took a short there and took profits.
As part of normalization, we will have to decide what the maturity structure should be in the longer term. This choice raises many complex issues and has possible implications for the stance of policy.
Interesting.
Today's preliminary discussion laid the groundwork for more complete analysis and discussion, and we plan to return to the maturity composition question toward the end of the year.
I was looking to get it.
Need to resolve this matter, however, and any decisions we ultimately
So
will be implemented with
I don't think there was necessarily a target, but I was looking for ZB to try and make a run to 16.
as we've often emphasized.
But I just didn't necessarily get like a super clear thing until it was like already falling apart, you know?
Finally, we made a small technical adjustment in one of our tools for implementing monetary policy, the interest rate on excess reserves, or
Okay, so this is important.
the change does not reflect any shift in the intended stance of monetary policy.
Okay.
The IOER rate to help keep the federal funds rate in our target range. As balance sheet normalization continues, we have expected that the effective federal funds rate would shift up over time relative to the IOER rate. Last year, we twice lowered the IOER rate by 5 basis points relative to the top of the target range after the federal funds rate moved toward the top of the range.
Curious.
These actions helped keep the effective federal funds rate well within the target range. And today, we made one more such change. The target range for the federal funds rate is our main indicator of the stance of policy, and it remains unchanged.
Okay.
Thank you very much. I'll be glad to take your questions.
Let's move him over here.
Thank you, Mr. Chair. Steve Leisman, CNBC. As the statement noted, core inflation now running below 2%. It's been falling for 3 straight months, and while you've been close, it's only been at 2% or above 1 month since 2000.
The US dollar has slumped because he's brushed off inflation worries. Our baseline view remains that a strong job market and continued growth, inflation will return to 2% over time.
Metric for when it would be time, at what level would it require
And the dollar moved down.
from the committee?
The Japanese yen in particular really moved, and that's what pushed us down.
Inflation objective and to achieving it on a sustained and symmetric basis. As I mentioned, we think our policy stance is appropriate at the moment, and we don't see a strong case for moving in either direction. I would point out that inflation actually ran, including core inflation, actually ran pretty close to 2% for much of
Turn up the volume a
2018.
little bit.
As you point out, both headline and core, though, did come in on the soft side in the first quarter, and that was not expected as it relates to core. So we say in our statement of longer run goals and monetary policy strategy that the committee would be concerned if inflation were running persistently above or below 2%. So persistent carries the sense of something that's not transient, something that will sustain over a period of time. And in this case, as we look at these readings in the first quarter for core, we do see good reasons to think that some or all of the unexpected decrease may wind up being transient. And I point to things like
So what he is saying is somewhat hawkish.
In addition, the trimmed mean measures of inflation did not go down as much. Indeed, Dallas trim mean is at 2%. But to go back to your question,
So now we're in this area where I was like, if we get down to here, they might push down through it.
something the committee would be concerned about, and something that we would
Lots
take
of
into
volume.
account in setting policy.
Lots of volume.
Sam.
Thanks very much. Sam Fleming from the Financial Times. Let me carry on the same theme. There's obviously been a lot of speculation in the markets about the prospects for a rate reduction this year. Do you think markets have effectively got ahead of themselves on this? And what sort of economic...
Yeah, I think, going back to where I should have taken the profit, I think that when he was talking, I should have taken it off, right? So I don't like being in while he's talking.
So, as I mentioned, we've just come through a 2-day meeting, and we've done a deep dive on economic and financial conditions in the United States and around the world, and thought about our policy. And we do think our policy stance is appropriate right now. We don't see a strong case for moving in either direction. So
We don't see a strong case for moving in either
as
direction.
a routine matter, as you will know, we look not only at our baseline, but we also look at alternative simulations, both better and worse, and we ask ourselves what the appropriate policy response would be. But that's all we do, and I would just say that we're comfortable.
Yeah.
The
Well,
committee is comfortable
I didn't take it off there because of that. Okay, I have some profit. If it comes back, I break even. It's okay.
Shifting gears a little bit, I wondered if you could
I guess that's up to you. If you, how much you're willing to give up, right?
Federal funds spread sense of why it matters, whether or not
In a situation like this, having it move up and down
is there
6
any
ticks isn't
read-through to
really
credit
unusual.
financial
So
conditions that you worry about, or is
yeah,
it
curve
simply a
flattening
matter of
across the
Fed
board very
showing
much
that it
so.
can control what it says it's controlling? And I do have a follow-up.
Okay, so I'm seeing some stacking
A
here.
small temporary deviation outside of the range
Wow.
would really wouldn't be important, as your question suggests. But we do think it's important that we be able to, control the federal funds rate and generally keep it within the range. That's just good monetary policy, good monetary control. So, we think it's important, and we have the
This
tools
is
to do
kind
that,
of,
so we've used them
it
again.
has me a little bit off balance because
Fix it really has
we didn't get the trade that I wanted off the bat. It went up,
Follow up on this, it is
and then
demonstrating
that
you
trade
control the market.
fizzled out, and now we are getting the trade that I wanted, and I'm kind of watching it like I don't believe it.
Declines in the IOER in steady
And I think the way that this is being volatile and reacting to what he says, it probably means that it's a little bit too
generally speaking,
crazy and volatile for me.
the federal funds rate, we control only directly the federal funds rate in terms of the market rate. And the transmission of the federal funds rate into other short-term rates, money market rates, has been very good over a long period of time. And that's important because it's really broader financial conditions that matter, not so much precisely the federal funds rate.
We don't have a strong case for moving in either direction.
The federal funds rate is actually important.
Does that justify us moving down to the low of the day, though?
Us not controlling it, so I think
I don't know.
we'll continue to control it, and it will continue to.
This is
transmit well into
pretty
broader
wild. Retraced the whole day's range, right?
Bloomberg.
Well, there's some buying right there.
The financial conditions that you see out there, the minutes in the March meeting tell us a few officials worried about financial stability risks. Was there a broader discussion at this meeting? Any consensus on whether such risks are growing as the markets hit new highs and we do see some instability in short-end trading? Is it possible that rates are too low at this point?
So we actually have a financial stability briefing and opportunity for comment every other meeting. So we had our quarterly briefing yesterday, as a matter of fact. And
So reloading there at 19.5.
And I think there haven't been a lot of.
You see, but they
since
they
the
keep
last,
failing them.
meeting, but I'll just go through the way we think about it. First,
Yeah, well, that one
we
held.
published our framework for assessing financial stability vulnerabilities, put it out for comment, and welcome any feedback that we get from the public. And that enables us to focus our assessments, regularly on the same thing, so that we can be held accountable and be transparent. So there are four aspects that I'll go through quickly, but I'd say that the headline really is that while there's some concerns around non-financial corporate debt, really the finding is that overall vulnerabilities in the financial stability vulnerabilities are moderate on balance. And in addition, I would say that
Unless someone in that room farts and starts a recession, right?
Shocks of various kinds with high capital and liquidity. But the four things we look at are first asset prices. And as for asset prices, some asset prices are somewhat elevated, but I would say not extremely so. Leverage in the financial sector, I mentioned, households are actually in good shape from a leverage standpoint. Default rates are low, borrowing is relatively low. Non-financial corporates is an area that we've spotlighted and focused on for attention. And there are concerns about that, not so much from a financial stability standpoint, but from the standpoint that having a highly levered corporate sector could be an amplifier for a downturn. And then the last two things are really about the leverage in the financial system and funding risk, and those are both very, very low by historic standards in the United States. So on balance, in my view, vulnerabilities are moderate.
If I could follow up on that, I'm just curious as to whether the level of asset prices is a reason why you might not be interested in cutting rates.
Yeah, so we do say that risks to the financial system, or we say in our longer-run statement of goals and monetary policy strategy, that risks to the financial system that could prevent us from achieving our goals.
So here it is doing the thing again at 18.
I would say that, though, that really the tools for addressing those concerns are better, capital, liquidity, good supervision, good stress testing, and things like that.
It's doing the thing.
First order tools to deal with
This
these
18.5 is pulling. There's a bunch of liquidity at 18. I suspect that there is an iceberg at 18.5. There's definitely one at 19.
Chair Powell, with the benefit of hindsight, did last year's rate increases make it harder for the Fed to credibly affirm its 2% symmetric inflation target is not in fact a ceiling? And if so, would it be appropriate to lower rates if core inflation remained persistently closer to 1.5%?
I like this guy's question.
And if not, do you worry about any unwelcome tightening in real rates given the recent softness in core inflation?
So to your first question, if you go back and think about the middle of last year, inflation was at 2%.
It was.
And appeared to be staying there. And the economy was quite strong, was growing strong. The fiscal changes were hitting the economy in a very positive way. And so I think the expectation was that inflation would remain up around 2%. The weak first quarter performance was not expected, of core was not expected, and I don't think is related to anything we did in terms of raising rates.
Okay.
We don't know this, but you never know until only with hindsight. With
He knows that what he just said is bullshit.
The transient or idiosyncratic.
Come on.
Second part of your question.
Well, he knows that people are going to be like, yeah, wasn't your fault. Give me a break. Let's go pull up that video from last December, huh? You didn't have any effect on it. Good grief. I'm sorry. I'm a little carried away there, but my goodness.
As I said earlier, we do address this in our sort of constitutional document. If inflation were to run persistently below 2% or persistently above 2%, that would be a concern for the committee, and the committee would take that into account in making policy.
Okay.
I think it's important that
this time
run close to and sustainably
seems like
period
the
of time
support here has
symmetrically
changed a
around
little bit.
2%, because if it doesn't, you run the risk that inflation
And look at this
expectations,
cloud right here. That's really
if
weird
it
too.
has been the case,
See that?
most of the misses are on the downside. Inflation expectations over time could be pulled down, and that could put downward pressure on inflation and make it harder for us to react to downturns and harder for us to support the economy in difficult times.
Looks like they're trying to reverse it, but I'm not sure if they're going to or not.
Gina Smilek, New York Times. So as you just mentioned, last year when you guys were kind of getting inflation coming in around 2%, you had this benefit of the tailwind of fiscal stimulus. And you still have that to some extent, although the tax cuts have mostly feeded through. We've still got something in the pipeline from the spending cap increases. So I guess, how do you think about inflation as that fiscal benefit wanes toward the end of this year?
Yeah, inflation, first of all, month to month, quarter to quarter, is going to move around. There'll always be factors hitting it. So probably the biggest the single factor driving it is the rate of underlying inflation, or a closely related idea of where inflation expectations are anchored. The thought being that's where inflation will go in the long run if it's not being pushed by those other factors. So we also think that slack, that the level of slack in the economy does play some small role. It's it's actually still a measurable role. It's nothing like it was in the 1960s when the Phillips curve was quite steep. So that's also something that plays a role.
Reloading at 21.5 now.
We take all those things into account, and the part of it that we can control is.
Are they going to take 21 off her? They are.
And,
See, they're doing it. They're doing it again.
This reading will be transient, and inflation will move back.
He's been taking the level break trade, and it's failing him every time.
Below 2% for a sustained period, then that's something we take into account in setting policy.
Okay, Donna.
Chairman Powell, Donna Borak with CNN. Pivoting a little bit about wages. Since 2010, women's real earnings have gone up about 3.9% compared to.
Oh, I've been waiting for this question.
2.1. Do you think the relative increase in women's wages is a problem for the U.S. economy?
Well, why would you word it like that?
I think generally, I'd have to see the data on that. I mean, it sounds like you picked a particular time frame. Over time, I won't really want to
Yeah,
guess whether that's
that
the case.
she didn't ask that correctly at
I
all.
think men and women should make the same for the same work, uh, by and large. So,
By and large.
Just to push a little bit on this, the data shows that women's wages are rising higher. Is there a damage to the U.S. economy if males' wages are declining or not growing as fast as women?
Yes.
I think we're getting in here to commenting on a.
He's not going to say it, but I say yes.
And that's something
But it
we
is a
have to
bait.
avoid.
She's asking it like a bait question.
Engage with potential nominees to the Fed, so I'm really not gonna go. there.
So he knows. He says he acknowledges why she's asking the question. That's curious.
Victoria Guido with Politico. I wanted to ask, early last month, I believe it was April 2nd, the FedWire system went down. And I was just wondering if you could talk about what happened there, how long
Well,
it
listen,
lasted,
folks.
whether
If
you know
real
who's
wages
looking into it, and,
are stagnating and or going down because more women are entering the workforce and therefore creating more competition for wages, that is a negative thing for workers in general in the long run.
In the 3 or 4 hour
I mean, obviously at some point you get all of the women that are ever going to get into the workforce are in there, and then it's no longer a negative force. But for everybody that's in the workforce right now, more people coming in, it hurts your wages. It hurts your wages. What did he say? He said that men and women should be paid the same wage for the same work, by and large. You could tell he was uncomfortable with the question.
Recession, and there are some countries that have had expansions for 15, 20, 25 years. Do you think that's something that's practical for the U.S.?
Okay, here's the opening in at 22.
Expansion, and for you.
I wanted to buy it down here, but I thought it might test that 18 and never did.
I wouldn't want to speculate. There's always the example of Australia that everyone I think is aware of, where I think they're in year 28 of their expansion. So things are possible. I think all I can see is that we have an economy where the expansion is continuing, growth.
Well, they're very incensed by what Moore is saying. Because what is he really saying? Think about it. What he's really saying is that that workers would be better off if women stayed home and just took care of the kids like they used to in the 50s. And that a lot of the problems that we've had since the 70s in terms of household income not increasing is because of women entering the workforce. That's what he's saying. He's right.
Do you see similarities in
He's right in the short term, at least.
In the length, I mean, the situations were quite different then. This was before inflation really was under control. It's very interesting to look at the history. I find it quite interesting to look at different periods. But I think in our own cycle, we face a particular set of challenges that are really what's relevant for us now.
Okay, Marty, and then we'll go to Paul.
Mr. Chairman, Marty Krutzinger with the AP. You've repeatedly said that the Fed's going to conduct monetary policy without regard to outside political pressure, but it seems like the president is intent on increasing that political pressure. Yesterday, he said you should cut rates a full percentage point.
I was quite shocked by that tweet yesterday.
What do those comments do in terms of affecting how you pursue policy and how you convey your decisions to the public?
Yeah, so as you know, we are a non-political institution, and that means we don't think about short-term political considerations, we don't discuss them, and we don't consider them in making our decisions one way or the other. And what we're always solving for in our process, in our work, is to carry out our mission, which is to extend the economic expansion, keep the labor market strong, and get inflation around 2%.
Maybe they do it this time.
To give you an idea of what our process is like, maybe as a way of putting all that in context. So for the past maybe 10 days,
So it's pulling now.
17 FOMC members will have made extensive preparations, catching up on the latest data, reading all the memos, talking to their colleagues and their staff. As you also are, I'm sure, aware, Marty, we talk to literally thousands of business people and market people and people in the nonprofit sector and the educational sector, and just to get a better sense of the economy. We put all that together. We come together for 2 days. The first day begins with an economic briefing, which is sort of economic and financial developments in the United States and around the world. That takes up most of the first day, and we talk about this in great detail. We go away, we think about that, and we come back, and the next day we talk about monetary policy. And in this particular case, we came to a unanimous decision after an extensive discussion that our monetary policy stance is appropriate where it is. And we think our monetary policy stance is in a good place, and we're going to be patient as we consider adjustments. So, and we also see, by the way, the evolving risk picture as very consistent with that outlook. So we don't feel like the data is pushing us in either direction. Of course, we'll not hesitate if we do feel that the data justify a move in either direction. But that's our process. That's how we think about things. We don't think about other factors. We don't let them into our decision making. We don't discuss them.
Paul Kiernan from Dow Jones Newswires. Thanks for the question. In the last 23 years, core PCE inflation has run above 2%, only during a period that coincided with the housing bubble. I'd like to know what you would say to people who worry that it will prove difficult for the Fed to lift inflation without potentially stoking another asset bubble of some sort. Thank you.
Yeah.
Good question.
I mean, you're pointing to really the fact that in recent years, inflation has moved down and down, and really many major central banks have struggled to reach their inflation goals from below. And that includes us, although we've come closer, I think.
Than we've come closer than other countries.
And it's just a question, I think, of demographic and other large and in some cases global forces that are making that are disinflationary to some extent.
Yes.
And it creates significant challenges. One, I would say, is it means that interest rates will be lower.
Ouch.
We'll be closer to the effective lower bound more of the time, because that means lower interest rates. And that's one of the reasons we're having a review of our monetary policy strategies, tools, and communications this year, is to think about that problem. You mentioned the connection to financial stability of lower for longer rates, and that is another challenge.
The way that my auto targets show up is wrong. You should be the plus 6-1.
Of our goals, but we also view, and I do.
We need to switch it around.
That macroprudential and supervisory tools, regulatory tools, things like the stress tests that we can do right through the cycle, those are really the best defense against financial instability, so that the financial system is highly resilient to the kinds of financial shocks that can happen.
Hey, Greg.
It's stacking up behind us.
Thank you. Greg Rabb from MarketWatch. This morning, the ISM Manufacturing Index had its worst reading since October 2016. So isn't that a dark cloud on your outlook for strong growth for the rest of the year? I mean, how much weight does it hold for you? And is it a sign that monetary policy might be too tight?
So this is the ISM reading, I guess, from this morning on manufacturing. Yeah, I mean, we see that reading as it's still a positive reading and consistent with what we expect from the manufacturing sector, which is moderate or perhaps modest growth. Manufacturing has been weak all around the world. Services have been growing faster. So it's something that we're watching carefully, but we do expect
they seem to be interested in this.
Growth from the manufacturing sector.
All right. Well, that's it for me.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for doing
Didn't
this.
like it.
You mentioned, talk about domestic growth a little bit with the economy. You mentioned that the progress in the talks with China trade, progress in the talks with
Did I
Japanese
screw it up?
trade,
No, okay, we're fine.
moving or going to move through Congress. Can you talk about a little bit of the domestic growth that you're seeing going forward for the rest of the year, and could these trade deals turn into tailwinds for the economy?
our outlook and my outlook is a positive one, is a healthy one for the U.S. economy, for growth for the rest of this year. And I would say that the basis for that really is consumer spending and business investment. So if you look at consumer spending, you saw stronger retail sales, stronger motor vehicle sales in March. And as I mentioned, the conditions, the broader economic fundamentals are strong in support of consumer spending. That's more accommodative financial conditions, high confidence readings, high levels of employment, wages going up. All those things are going to support consumer spending. So that's a significant part of the outlook this year. And business investment should also be positive.
That's what I wanted to have happen.
In that sort of direction. In terms of the effect of trade deals, I think one thing would be that the resolution of the uncertainty around these trade negotiations would, I would guess, be a positive for business sentiment. We have been hearing from our business contacts
That's not what I want.
Really a lot since the beginning of the trade negotiations that
Strategy manager.
Uncertainty is a concern if you import metals or whatever for your product or export your product, then
this one should be 6, and this one should be 2.
And of course, most of the gains, though, I would expect, if even from a successful trade negotiation, would come in over time. You know, I don't think they wouldn't be the kind of thing where you'd immediately feel big effects right away, but they could be quite important over a longer period. So that, I think, that's would be my expectation. And I don't know, though. I haven't seen, none of us, at least I haven't seen the details of what's been negotiated.
Mm.
Don.
Don Lee with the LA Times.
You notice that he's not as confident as at the beginning of the conference. He's stumbling over his words a lot more now.
Inflation, how significant they are, and why you think those factors will pass.
Sure. Well, I would just mention a couple. Let me say, I don't mean to diminish concerns about too low inflation, but I think there's good reason to think that these low readings are particularly influenced by some transitory factors. One that I would mention is portfolio management services, which would tend to go down when asset prices go down with a lag. And so when asset prices went back up, probably there'll be a swing around there, positive contribution. Other ones that get mentioned are things like apparel, and apparel prices were very, very low. There was a change in the methodology. And another one is, airfares. There are many little things. So we don't know until we see, but there's reason to think that those would be transient and would turn around. And another way to look at it is there are models that look at inflation in different ways, like well, not models, but measures, like the Dallas Trim Mean, as I mentioned. So Trim Mean, it cuts off the big movements on the upside.
All right, well, I'm done.
Just the mean movements in inflation of various products.
So when I cancel that, when I close that out, it has problems canceling it for some reason.
It was above that, but it's at 2% now. So there's reason to think that these will be transient. We, of course, will be watching very carefully to see that that is the case. I would point to the case of cell phone services. Many of you will remember in March of 2017, there was a very low reading of
I really shouldn't have been trying to buy there, huh?
Mobile phone services, and it was kind of a price war, and it dragged down core inflation for a full year, but it did not look like something that would be repeated. And we kind of thought so and said so, and then sure enough, in 2018, we had those months of 2% inflation. So again, we'll have to see here. We're going to be watching, really, I'd like to say we're going to be watching inflation carefully to see that these things are transient. And I'll end by saying we are strongly committed to the 2% inflation objective.
Okay, Nancy.
Just following up, Chair Pollock, Nancy Marshall-Genzer with Marketplace. You were saying if inflation does stay low and these low inflation rates are not transient, you said a couple times you'll take that into account with monetary policy. How specifically will you take that into account?
Yeah, it's hard to say because there's so many other variables. I mean,
so there's the reload again.
There are many variables to be taken into account at any given time, but that's
no, actually, that's profit taking.
Stable prices is half of our mandate, and we've defined that as 2%. So we'd be concerned, and we'd take it into account.
So cut in interest rates would be positive?
I can't really be any more specific than what I've said.
Okay, Jean, and then Hannah.
Hi, Jean Young with Market News. If the Fed funds rate keeps rising, do you see room for another IOER adjustment? And then can you speak to any other strategies or tools that
The
might
ones that I've been getting that
keeping a
that were
ceiling on
actually good
short-term
trades aren't
interest
getting
rates?
filled. This is funny, right?
Other ideas floated, like the standard
Well, there's
repo
16.
facility and targeting a different benchmark rate.
Next level down is 13.
We will use our
Can
tools
see things down there.
to keep the federal funds rate, somewhere in the target range. We'll do that. Don't expect to need to do it again, but we don't know.
Yeah.
With the balance sheet is now.
Well, I
side of
switched
is
it.
going to be driven by demand
Yeah.
for liabilities, principally reserves, as I mentioned. And we're right at that point where we're starting to learn more.
I mean, I'm not
what the real
keeping the
demand
stats
for
on
reserves
this
is
one.
over the next few months. And so there is no template for this. There's no roadmap. We just have to do it, and that's why we're moving so very gradually. It's why we tapered the roll-off to only $15 billion in Treasuries per month. We, effective, I guess today, we're cutting the roll-off rate for Treasuries in half, just because we want to take our time and move gradually here. So. That's that. In terms of other tools, we're actually, I'm sure at an upcoming meeting, we will be looking at the idea of a repo facility. I don't have any.
So are they going to be able to make it back up to 18.5? Where was I buying it at?
As a possible
19.
to our toolbox. Again, I wouldn't say it would just be in a way for us to do what we do, which is to do a deep dive on it, think carefully about it, look at the pros and cons, look at the different possible ways to do it, and then go away and think about it for a little while, and then probably come back and make a decision. But that's something we'll do at an upcoming meeting, I would imagine.
Hannah Lang, American banker. On the regulatory side, the Fed and other bank regulators are said to be weighing options for retooling a proposal to revise the Volcker rule. Can you give any indication how close the agencies are to coming to a solution and what that solution might look like, whether it would be starting from scratch entirely or making changes to the original proposal?
We put out a proposal on Volcker some time ago, and we got a lot of comments, and we're reviewing them carefully. I really don't have a lot for you. I know they're making good progress. I don't really have a date, though. And in terms of what all it's going to be, it's not something I can say with any certainty yet.
Okay, we'll go to Brian.
Hi there, Brian Chung with Yahoo Finance. So, given what you've said about the expectations for consumption, also business fixed investment perhaps bouncing back in the next GDP reading, I'm wondering if you think that continued growth in economic activity might show some sort of underlying fundamental that could flag another overheating. For example, the median projection in the March meeting for GDP growth for 2019 was 2.1, so I'm just kind of curious about what you see going forward if we continue to see strong GDP numbers.
Well, we don't see any evidence at all of overheating, for one thing. We see inflation below 2% now, as I mentioned, pretty close to 2% for most of last year. So really no signs of overheating. If you look at the labor
Okay, now
market,
it's setting it up,
for a long
right?
time now, there have been anecdotal reports of labor shortages and difficulty in finding skilled labor and that kind of thing. Nonetheless, you have very strong job creation, and you have wages moving up at a rate that is appropriate given inflation and given productivity, but not at all signaling any overheating at all. It's not higher than that rate that would incorporate both inflation and productivity. So really not seeing signs of overheating at the moment.
Okay, Heather, for the last question.
Okay.
Are wages ever going to get back above 4% in this cycle? Can you kind of give us a read on, but more substantively, can you give us a read on how the committee views productivity growth, if it's accelerating enough?
Yeah, in terms of wages getting over 4%, wages have moved up pretty steadily over the last 5 years and are now, as wages and benefits are now between 3 and 3.5%. Just for the last couple of years.
Bot says bye, so does that mean you made your money and you're done?
For people at the lowest end of compensation and education, which is which is kind of a welcome thing. You mentioned productivity. So productivity is really very difficult to predict. No one has been able to predict it successfully, so I won't really try. But I will say this. Productivity was very, very low in the wake of the crisis for 6 or 7 years. Last year, we had 1.9% productivity, which is much higher. I don't know if that level can be sustained, but we really, it's driven to some extent by technological
Okay, that
development
16.5 is
and really the diffusion of technology
going back and forth now.
the economy.
Falling.
It's very hard to predict. So I think it's positive. In fact, I'll mention, if we're talking
I think
about
it's
the supply
positive.
side, labor force participation. Really, there has been a significant positive supply side development over the last year and a half between, the uptick in labor force participation, which goes back, several years, but also productivity. And that does suggest more room to grow. It suggests a less tight economy, a less, maybe part of the explanation for lower inflation.
Thank you.
Thanks very much.
And that's that. Okay, well, that's what happens when you leave trades on while he's talking. Definitely at the beginning. This is classic. Now it's time to buy. I don't know. I think, how long has it been? It's been 2 minutes. They are kind of making me suspicious here. Back end is flattening. Holy shit. Well, I am definitely off kilter here, guys. Yeah. Why did it give me that? Oh. Is that why? Oh, I'm really confused now. I mean, if you 3 to 4 times sell it did not work, then you switch it, sell, and finally that's the point where you should buy. Yeah, totally. Totally. But, man. Well, I think I just completely tilted is what's happened. I felt like it was giving me a good look for a continuation, and I was just really frustrated that, I bought it here and I thought it was going to revert and it went lower. And then I thought, well, now that we're down there, now it can go lower. And as soon as I do it, it flips around on me, There was an iceberg at 18.5, saved my stop, but geez. Okay. So the E-mini is kind of moving up. Recovering at least. Well, you should never sell bottoms. I don't believe that one. It depends. I mean, obviously, if it's a range-bound day, then you don't want to do that. But when there's a lot of activity. You know, if you get the continuation at a top, then you take it. Although clearly, some of the continuation signals that I've relied upon in the past are no longer working, are they? Especially that reload. Man, that reload on some of the moves like we had today would be so reliable, and it's failed every time that we've looked at it this week. Isn't that interesting? Now it's doing that thing where they only put a little bit on. Hmm. Okay, 1,000 that time. Bad sign. And the offer pulling, perhaps. You mean he's still moving up? It's hard to tell, though. The correlations could be inverse or in line. Oh man, that level 2 is doing all sorts of crazy here. There's a stack there at 15.5, though. You have a significant delay in the chat. Well, I might not be seeing them right away. But there is about, it's going to be about 5 seconds. Okay, that's 16.5 pulled. Something weird is going on in the 5-year now. So the 16.5 doesn't want to go. And the 5-year did tick up, I think is what the deal is. $14 to $19 and then back to $14. Seen that? It's happening as it's ticking over here. Iceberg at 17. They hit it a few times. Weak bid. So far, at least. Okay, there's 1,000. Pulls, they tick back down. Weak offer at first, but that stacks to 1,000. 5-year dancing around. At 15.5 doesn't seem like it's gonna pull though. Whoa. Look at that. They just creamed that guy. What the fuck? And then it just sits there? Ooh. That is one of the most bizarre things I have ever seen. Somebody swept two prices in both the 5 and the 10-year. I didn't really have my eye close enough to see the 30, but they swept two prices there, and now it's just sitting here. There was like the DOM and the volume and everything didn't react to that at all. He just swept down two prices. That is really weird. That's so crazy. And I was like, oh, the 15.5's not pulling. And then they sold it down 2 ticks. That's wild. Yeah, welcome to trading near the close. Is that what it is? I guess you're right that you can get some pretty crazy trading going into the 2 o'clock close of trade. It's at 2 o'clock, right? Or is it 1:30? No, it's 2. Okay, that swept the 16 now too. Now they're building some momentum. Okay. Look at that target down at 12.5 in the 5-year. So because we're seeing the reload, watch, this time it's going to work and they're going to push it lower. I feel like it's going to go lower. Nope, it ticked up. I mean, yay for getting an exit there. That was great. But it just disappoints me that that reload trade is working so poorly because, or is actually becoming a counter signal, because I've made so much money off of that in the past. You know what I'm saying? That's been one of my best, most profitable trades, and now it doesn't work. Now it's an exit. Ain't that something? Now, as that turned, the E-mini started selling. Ooh, the E-mini is selling. And the JPY is maybe reverting a little bit. Well, the E-mini is unhappy because they don't think that they're going to get as much stimulus. Is that right? I guess we're still above yesterday's levels in the E-mini. And here they're showing you a potential short at 16.5. I don't know if you can take that one though, because the way that, given that we had that skip that was in our favor, maybe he decided to throw me a bone today. Like, well, Seth looks pretty unhappy with his trading today. Let's just, give him one so that this last one he can have a winner and feel good about himself. I am wondering if perhaps the oddness that I saw between the 30 minutes between the statement and the press conference, it felt like it was ticking strangely, and I wonder if that was just because it's so late in the day. Granted, I've traded FOMC before. Traded FOMC before with live account and done very well. And I don't remember it being like that. So it's kind of weird, but how many favorable ticks was that first one? It was 8. I really wish that I had seen a more clear exit there on that first trade, or that when it came back 4, I took it off at +4. I just feel really dumb about that. But I had in my head that I had caught a good spot and we were trending up, and that I should just try and hold it as long as possible, Oh well, it happens, but probably there will be a day where I do that and I make a really, really good winner off of it. But I don't think that expectancy wise that doing that is right. If I'm getting crazy so I mean, there was like a 7K iceberg up here. I've always said if it was on the offer, I'd usually take it off. But now I think if I get to a place like that and I have 5 ticks in my favor, I should have taken +7 there at 03.5 for sure. For sure. And I should have taken it off when the press conference started for sure as well. So I closed that one at, how long did I hold it? Here, this one, 12:32. So I held it 2 minutes 50 seconds, almost 3 minutes into the press conference. So I held it 3 minutes longer than I should have. Okay, so I bought it at no, I sold it at 17 before. I got the -3. Now it's come back. I kind of have wonder if they're going to move back up to the 21.5 and find balance or something like that. Yeah. This is kind of where it makes me want to buy it, but I know it's super dangerous to do it. And it is curious that we're moving up as the E-mini moves down. They're not positively correlated. If anything, they're negatively correlated. Like they should be, but I thought maybe that correlation would fall apart, and it's not. Now what we got going on here? They could also just distribute around 17. What was this other notification on my phone? Okay. Man, those E-mini traders, they look so disappointed. Sorry, putting a little tweet out there. Well, I am very disappointed that ZB didn't hit 16. That was the other thing that was on the upside that was making me think that it could keep going. Here in this spot, it's indicating to me that there might be some opportunity in selling it at 17, but that it's a little bit too sketchy. Seeing like that. Okay. So now it's having a little bit of trouble at 18. Actually, it looks reasonably happy at 18. I'm surprised they can't cross over that gap. Emini just looks so unhappy, guys. She's so unhappy. Eighteen half. Well, this is where again it's above 19, and then I'm like, what the hell, guys? They're probably going to have some problems here at 19, though. Not that it won't stop, but I think you're probably going to see a little bit of messing around and shenanigans first. How the Emini is just falling apart. Whew. Should have just turned around and sold the Emini, huh? Well, sure enough, 19 half went off again. I feel like I've calmed myself down. Just those two trades right there just really upset me. Attorney William Barr doesn't say Attorney General. Huh. Okay, CNN. Anyways, William Barr is defiant amid furor over his handling of the Mueller report. Sell in May, the S&P 500 has a 6-year winning streak going through the month of May with an average gain of just above 1.5%. Yeah, the sell in May thing has not really worked since the financial crisis. That doesn't mean that it's not going to work this time. And it's kind of like, even though it doesn't work per se, you're still able to avoid some volatility by doing it. So it's not like it was a bad idea. Poor you, Minnie. Poor girl. The Federal Reserve doesn't love her enough anymore. Oh, woe is me. Without more stimulus, I have no reason to live. At least you made something back. Yeah, but it's 3 in a row, so does it really count? It doesn't really count. I mean, it made me feel better about myself. Like when I took that second one, and here's the thing, that second one, it had some favorable ticks, you know? So like this one kind of went against me really quickly. But just that, and then that, I was feeling really awful about myself. I really was. I'm maybe I'm exaggerating a little bit, but I felt tense. All right. And then when I made this second one, because it went against me, holy crap, did it go against me? That was -4 and then +4. My, oh my. And I did get the right price when I got out. But that one, I sweat so bad. And so it's like, yeah, I did. It was a winner, but was it, a good winner would be one with no favorable excursion. Like this thing right here. No, not this one. This one right here. So it was MAE 2. 8. Like that's good. I'm happy about that. Even though it was a break-even trade. I should be happy about that. It sucks to break even on it, but I should still be happy about it that I caught a good spot and that, any other trade, maybe it would have given me a more clear signal and I would have gotten out. Maybe there was a clear signal there and I just didn't really see it. Whatever. I can be happy. But these two, that just was crushing. Now I kind of feel like post-crisis, You ever had that thing where like you were just had a really poor emotional time, and then everything was fixed and it was better, and you feel okay, but you still feel kind of tired, and like you can tell that you were just gone through something emotionally traumatic. I kind of feel like that right now. I might not show it because I think that when I get a little tilted that I start to get a little bit more stoic, but man, I wasn't feeling so great on some of those trades. But it's okay. I haven't felt that much pressure on in trading in a long time. I think I was putting a lot of pressure on myself because I felt like that this was a really significant FOMC meeting and I wanted to have, you know, some good content to show for it or something. Man, I really should have just taken the profit up there, and then when it was falling down, maybe I could have sold it. Now, the other thing I wonder, if we come over here to the charts, how come the charts aren't showing? There we go. Okay. And let's make this big, and let's think about this. I took it at 124 even. I waited through that, and that. So that was a part of why I held it so long, is that I had already held it so long. And then when it came back to here, I took it off. It went through me. Should I have sold it at 31? I think so. But I was probably too caught up in feeling shitty about it going all the way back on me. So that was probably a really good signal right there that I missed. And I could have taken that one and then taken it off probably at 22.5, Waited. If not there, 23. Definitely 19. Oh, except for that at 19, I thought it was going to go again. Well, technically it did eventually, but no. 19 was an exit. I bought it there. Okay. Yes. So upset. Now you're getting the absorption one on both sides. That one's always that trade always, it's not a trade, but that signal, let's say. I mean, it happens often. Always makes me a little uneasy because I never know what to make of it. Did I switch it back? Oh, yeah. We should do that, and we should do that. You would not be able to tell by the chart, but it has been here at 18.5, 19 for a long time. And it has kind of been doing this thing where, like, let's see if we can show this. Okay, so there's the main event, right? Oh, why are you doing that? Can I zoom out? Okay. You see how there's some liquidity up here, and it goes into the liquidity and then gets pushed back out? And the liquidity actually rose up and then came back down as it went through it. So that was some absorption. And there was the iceberg. That was the exit signal, but it was on the bid. That's normally a sign of strength, and it fell apart. Okay. Here's where we got out, I think. 124. 124 even. Yeah. How come I don't see it? Well, anyways. So now, here's this liquidity. Follows it down. And you can see that there's some liquidity. That time it didn't really catch it. Okay, here now, you can see that there's some liquidity catching it and boosting it up. And then brings us to where we are at now. My chart is screwed up. There we go, fixed it. But on the DOM, I can see some liquidity above us. Right there, right? So 5 minutes left, but maybe we turn back down. I don't know. Whoa. Oh, okay. You buy that. No, don't go without me. No, don't do that either. Thank you. Is there some deuce hitting? No, I don't see anything. Okay, well, that's not how you want that to behave. Ooh, look at that. And these got smacked down by it. And it filled up behind us. So maybe you could still sell 18F. Let's say 1400 print there. Good. Okay. Cool. Keep going. No. Ugh. Well, that's not cool. I do see the little turn in cumulative delta, but that fell down way too easily. Treasuries are still kind of pointed down, though. Every time I think I see a tick in the E-mini that I think matters, it doesn't matter. You just get these little runs, you know, three ticks up, 4 ticks down out of nowhere. I don't think they mean anything. I think it's just noise. See that? So definitely some buying in here, though. They are at a key support level from yesterday. That's probably not a good thing. I mean, there's probably means that they're really going to want to bust it. They're trying hard, though. See those 8s? Yeah. That's the end of that. Okay, interesting. So I just saw something there in the E-mini that I think I need to remember. Because it was doing stuff, but then all of a sudden there was some liquidity that showed up on the offer that really made them slide down. I guess that was the close, huh? Yeah, this right here. 29.25. So meh. -5 overall. I think faster markets are easier to read order flow. If you're not using charts, it's easy to lose focus, and slower markets takes longer to play out. Yeah, I don't know. Like, here's the thing. Just I don't know if this is really relevant to your comment. Well, and Lucas says it takes more experience to trade faster markets, though, right? I'm not exactly. Like, it depends. So, like, we're going to draw a picture, okay? We're going to draw a picture, okay? So, here we're going to have a gauge, and this gauge is how fast, okay? Down here is like the summer, right? This really sucks. Like, this really sucks. Trading this, like, seriously, if you're a retail trader, this or that, like that week after Christmas, between Christmas and New Year's, do not trade that. Straight up, don't trade it. All right? Then you kind of get into the time period that we've been doing, right? This is a slow market, but there can be trends and stop runs and things like that. All right? And then there's average. Let's just say that this is average. Okay? This is average, like January to March action. And September to December. News days. News days. That was awful. Oops. Oh my gosh, I totally erased everything. I just want to... Where's my eraser? There's the eraser. There we go. Okay. News day. Okay. Then this is like news. This is fast. And then this is like crazy. Okay. So when we're getting action like we had immediately after the release came up, and it's coming back and down, and you're seeing that it can go 8 to 16 ticks. Well, let's say more than 14 ticks in an instant. That fits into crazy. Don't trade this. Don't trade crazy. I would only trade crazy if you have a spot, right? So I kind of traded crazy and I had a spot. And it actually failed once because that was my first loser, right? So I bought it at 27.5. It came up here, right? I bought it. It fell down. Okay. That was bad. That was crazy. But then I found a spot and I took it. And the market went from crazy to like post news, right? So then it's okay, right? But if you don't have a spot, you know, that's why you notice sometimes you ever see me do this thing where like I'll put in a stop limit, you know? Okay. These are prices that they really shouldn't touch, and if they do, then maybe I want to buy through them. Okay? You can do that. If you have a good plan and you have a spot and you can get a little bit of buffer zone under your belt really quickly, then you can hold that and ride it and you can make a lot of money, and that's okay. But otherwise, don't touch it. Let them be crazy and don't touch it. And by the way, if you are in a trade and you've been in it for a while and you have some profit, and all of a sudden it goes from being slow to average to like crazy, get out. Because usually when you get crazy, there are stop runs, and stop runs are almost like a real stop run, almost always reverses for a few ticks at least. And so when you start to see that crazy, you always want to get out. I think up here, you know, there was some stop runs up in here for sure. They really did break through 0.2 and broke new highs. That was a stop run. You always have to think about taking the profit. I should have taken the profit up there. There was so many reasons I should have taken that profit. Anyways, I digress. Okay. When it's post news, maybe you trade it. Okay. Maybe you trade it. To trade the news, you still have to know something. You don't necessarily have to have like a specific price, but you have to know, okay, the market is moving up because they view that the PMI news that was released today is very bearish, and it shows a weakening economy. And so treasuries are moving up because they think that it increases the probability that the Federal Reserve is going to reduce rates. Okay? Then you can trade that. But if it like moves and it doesn't move the way that you think it should based off of the news, or you didn't understand what it was, or it was like a news release, or like not a news release, but some market action thing, like, Donald Trump is being impeached or something like that. maybe you want to stay out, okay? But average to fast is good. And when it's moving, when it's like this average, it will trend. And you will get good trends. And you will get trends that look like like this move down. Like this move down was a good example. Even though I was stuck gawking at it and feeling bad for myself. You see how it's very nice. Peaks and valleys, goes down, retraces, goes down, retraces a little bit, goes down, right? That's good stuff. That's good stuff. Probably not this year. This particular move is a little bit harder. But from here, that's good. That's easy to trade because all you got to do is sell it. You get what I mean? But not only that, but because there's a trend, so let me back up. Think of it this way. If it's slow action, why is it moving? Well, it's not really moving, and it's not really moving because the big traders have no reason to be trading it. And so if there's no reason for it to move in any one particular direction, then the truth is that it can move pretty much anywhere that it wants to. And the market maker can make that happen if he wants to. If he has enough size and enough control over the market, he can kind of just make it sit in an area, wait for enough people to take it a certain way, and then, whichever side ends up having more orders, he says, if we're here at 18 and I can see, when I just tell it to iceberg on both sides when it ticks up and down, and like 5,000 people buy it and 2,000 people sell it, then what is he going to do? He's going to move it down so that those 5,000 guys stop out. Whichever side has more in it for him. And that's what you tend to see in the slow action. And so you as a retail trader are just a sitting duck, I think. That's been my experience. Some people know how to trade it and I don't know how they do it. But for me, I feel like you're like a sitting duck, a retail trader, right? But when it's moving, when it's doing the average good action, there's reason for it to move. And the thing is that you can go in and you can market buy with your market order anywhere that you really want to. And all of these other guys that are big, they have to buy thousands of contracts. And they're just chasing it, basically. They're all screwed, And so at that point, if this guy wants to play some shenanigans on you or do something funky, he can't really get a whole lot out of it because he's probably too busy worrying about himself. And it's moving anyways, and so that action is easier to trade. It's going to come back on you less. You're going to have a higher win rate. The signals are more clear. You get faked out less, right? But there a certain point comes at which the action becomes so wild that even if you have a good read on it, there's a possibility that there's just going to be volatility. There's so many people stopping out left and right that it can move 4 ticks against you just like that. Just like I took that trade, it was probably too early of a time to trade. Now, the difficult thing is how do you say it's too slow or it's too fast to trade? And that's just experience. And sometimes I'm good at it. I think I've gotten a little bit better at it over the past month, but I don't think I did a very good job at it today because I traded it when it was a little bit too fast. But I don't know. I think there was some good trades and some good spots in there. I think that more than anything that I was just a little bit too emotional today. And I know that it's in the time period where I start to struggle anyways, and that messes with your head a little bit. And my signals just simply aren't working very well right now. This sort of a thing. I think that probably had more to do with it. But anyways, that was a big long spill. But I hope you were listening, because that's probably some of the most useful things for newer people. So when it's, knowing when to trade, that's the real thing, right? So you're going to get signals. You're going to find something. I think people get on themselves too hard. Like, there was, where was it? It was a webinar. Oh no, it was the Futures Trader 71 webinar where he was talking about the micro futures. And he was like, how many people are one lot traders? And he said, yeah, it was a lot of people. There were one lot traders. And then he said, I've known people, I talk to people all the time that have been trading for 10 years and aren't profitable. He said that he knows people that have been trading for 10 years and are still on sim. So, yeah. Where was I going with that? The ADHD is coming back, man. Anyways, you get these people. You've been on sim for 10 years. You can't tell me that in 10 years that this guy has never found a market where he's been able to do well, where he's been able to make good trades. I think that anybody that puts the time in is going to find a market that works for them. The problem is that the market changes, and then you don't know that you need to change. And how do you know what's changed, and how do you actually adjust to it? And you've got to understand the market and the order flow and all these other things well enough to be able to know that the market has changed and this is why and how I need to adjust. Just like we're trying to do, okay, it was FOMC today, so we could get trends, but the end result is that they're just holding. And so things have become range bound, and that's why you tend to see this thing where there will be a level break at the high or the low. Like the man way up here. Good grief. How much would you have made if you sold that? That was 04 to 19, right? 19. 20. Let's say 20. So, oh man. So 12, 16, 32 ticks down. If you'd shorted it there, good fucking grief. Wow. Okay. Anyways, because we're in a more range bound market, the reload doesn't follow through as often. Bada boom. Okay. So Lucas is saying, I think there were places where you didn't take 6-6 winners, but you were willing to take 4 tick losses. I never traded this time frame, though. It might be different. Okay, good point. So in with my plan, if I can't, okay, let's say that you have a, it's going up and then it comes down and then it goes up again, right? If it's going to come back more than, and let's say that I get in right here in the middle or whatever, or maybe let's say I get in right here at the top. Okay. If the market is going to go more than 4 ticks away from me, that's more risk than I'm willing to take. So if the market is really having stop runs of more than 4 ticks, then I'm out straight up. Right. But if I get the 6, okay, so there was a situation where, I was taking 4 ticks of risk, and so I wanted to get 6 out of it. But I don't like taking just an automated, exit based on how many it moved. I do pay attention to how far it moves, but I want to see a signal too. And that time I think that the signal was there and I just couldn't see him. There was probably a lot of signals, but this thing kind of fell down really quickly. So I wish I had sold it down here. Anyways, Smash the Bid says what Gary Norden says is true. Why not scalp market where more retail are playing lots of dumb orders you can pick off? So my question is, what is it that you have that is going to make you the one picking them off? Because I think that in that kind of market action, the only true edge in that kind of action is size. I think that the guy that owns all of the liquidity can move it anywhere that he wants. And if you had some edge that says, we're in a range, and so this is where everybody's leaning, and so I should take the reversal here at this point. Too many of you start doing that, and that market maker is going to go, okay, fine, I'm just going to push it higher. I really think that's what happens. I mean, obviously I can't prove it, but we're going to try again this summer for sure. I think we've learned a couple of things, but do you guys remember, I think a couple of years, I think Smash the Bid was around here, right? Last summer, especially around August. Well, and even around April and May of last year, right? It was like I was trying to be counter trend trading every time, and it never worked. Oh man, so frustrating. Anyways, and I'm probably going through the same mental process that everybody else is. I'm like, okay, it's getting range bound, so maybe I need to start playing the range. And because me and too many other people started doing that, that's why the market maker switched, and now he's starting to make it trend a little bit, or at least stopping people out. So I don't know. You've got to have something. I just don't feel like that I have enough edge in the really slow area. And I'm not convinced yet. Although if you really have something, Smash a Bid says I would shoot for 1 or 2 ticks in those areas. Okay, maybe. I don't know about 1. For me to make money with 1, it's got to be like 80%. Actually, I think it's like 7%. But anyways, now what was the other thing? ESCL currencies, etc. The reason treasuries are so good is because of the commissions, but it's hard to keep focused scalping, especially when you're going for big targets. Yeah. Well, the thing is that in an action like that, 8 is not big. To me, 12 to 32 is big. And to me, being in a trade for like an hour is big. This one, I was in it for 30 minutes. I don't know. Yeah. But it's a lot bigger targets than a lot of people in treasuries go for, that's for sure. I could potentially say, hey, I'm only taking 3 ticks every time and only a 2 tick loss, and that's it, period. I've done that sometimes and it's worked for me. It's usually what tends to happen is I'll go to that kind of mode in December, and then I'll just keep getting more and more and more out of them. And then it's like I always overdo it. And then you get to this time period where it's like, I want to hold it for so long. This is the first time this week that I've wanted to hold something, is it? In fact, yes, we're going to go back to this tomorrow. Today I didn't do it because I just wanted to trade 1 contract. But tomorrow, I think that usually the day after FOMC like this, there's usually pretty decent action, and it is a Thursday, and there's news on Friday. So we could still get some good trading the next 2 days. Just look at today's range in treasuries. 8 ticks is like 50% of the daily range. No, it's a quarter, but yeah. 8 ticks is usually a good move. But that's the only reason why I say it like that is like, we're still in the right window here. Yeah. When you look at a move, So there's the range. Here's the range from here to here. But when you look at the move, and I'm looking at it from here to here, you know? Okay. So that was from 20 to, and this is in the way. Okay. So it was from let's say 28 to 04. So that was 16 ticks. That's a big move. Okay. Let's come back. Yesterday. This one that you could have taken. Well, I don't think you could have taken this one. This zipper right here was actually told me to go short, but I digress. If you took it, that's from 12, let's say 12 to 16. Okay. So that one you would get 8 or 9 ticks. So if you're catching a trend, if you catch a real trend, I find that I tend to get 8 to 12 on a real trend. And if it's like you're taking it and you're trying to hold it to, you know, until the trend ends, which is when it turns into this choppy area, you know, I say that's 8 ticks, that's fine. But I don't think that that's what I've been doing either. I think that I've been doing things like I caught this and then it goes up again. And then I say, okay, I'm going to wait. And I really want to catch that whole thing. And I think that's for order flow and scalping, that's probably too much to expect. When it comes to here, you really don't know if it's going to go for more or not. You're relying on some other edge that tells you that it's going to move up that far, you know? Especially on a trade like that. Man, that one was a little weird. That one surprised me, you know? But it seems to me like you're saying, oh, buy it here at 18.5 and get 2 ticks and take it off at 19.5, right? And I'm not saying that you can't make money doing that. I'm just saying every time that I try to do it, I fucking suck at it. And I do not seem to have any appreciable edge for being able to tell when it's doing that. Every time I look at the DOM and I'm like, oh, it looks like people are leaning. It looks like it's trying to lure me into it and I should reverse here. They just stop run through it. And it's almost like, you know, and that's where it's like, okay, well, that didn't work last time. So now I'm going to try something else. So now you already know that you must not have an edge and you're just experimenting, right? But then it's like, no matter which one you choose, you lose. Is somebody watching me? What is the deal here? And I just refuse to believe that anybody would care that much to follow me, especially when I'm trading my sim. Granted, like I said, I do have a live account and I have traded live in some instances. But yeah. Yes, then buy again and again and again. Scratch if it's not wrong. Your edge is a scalper is the entry. After the entry, what is your edge? That's a good point. Smash the bid. Really, it seems to me like the real edge that I tend to gain from order flow is the location. That if you catch a good one, you catch one that never goes against you or only barely goes against you. For sure. And so you're right that if that's all it is and it's a range bound thing, you really shouldn't expect to get more than the range. But that's why, you know, it's funny, in December that's the way that I started playing it, and then it started trending, and I just kind of, I would always wait for it to pull back a little bit first. You know, it was like, if this happened, I would be, okay, this is too high for me to take long because it's halfway in between here and here, but if it comes back to here, then maybe I'll buy it, and I'd wait for it to come back to here, and if it was still doing it, then I would buy it. And then, you know, I kept catching better and better trends. And so then it started doing this thing where it was like, okay, you get up here. Hey, guess what? You can just buy that one right there. And I would catch that. And when that starts working, then I start relying on that one too much. And then the market turns back into this time period where it just never works. It never works. It's like, it just flips. In the moment that you got a good entry, never know how far it will go. Okay. I mean, I know a little bit on if I got a good entry based on how I got filled. If I get filled and they stack 2,000 on top of me, then I'm always nervous. That's the one I hate. Because that often means that you just got suckered, right? Yeah, Smash a Bid says, how it's a good entry by how you got filled. Okay, sure. Yes. I usually don't say that it's like a good entry until it's like, okay, I got filled like that. And then I get a tick out of it or something. And then I'm like, okay. I really was obviously seeing something because as I expected, the people got offsides and had to bail a tick higher. I feel like that it needs to tick away from it for me to really know if that was a great spot. I don't know. And Lucas says, nice chat. Gotta bounce. Yeah, I'm talking too much anyways. And I got some other things to do today. But I will see you tomorrow. We should have good trading tomorrow. Well, I think it'll be okay trading tomorrow. And then Friday, ADP. Ooh, I think I might be a little cautious on that one. That could... there's no telling how they're going to react, how they're going to interpret that one. I think it might be good, though. Anyways. I don't know. Smash the Bid, you definitely have a lot of good insights. Watching how the market orders are interacting with the limits is important too. So are you talking about like, if we come up to the edge, are there actually a lot of market orders hitting it, or do they just not want to touch it, sort of a thing? And that used to be one that we would watch a lot. And it worked for a little while, but you would come to the edge, you were getting pretty decent momentum, and then all of a sudden it's like the market orders just completely disappear. And then you tick down and it never looks back, or it completely reverses on you. And if you're in that trade, it's like, oh, it ticks up. Oh, it's really good. Wait, why is nobody buying at 12? Why did it tick down? Oh no. And then it falls apart on you so quickly. It's like everybody came in and they're holding it, and now they're realizing that they're not going to get any more, and they're all trying to take their profits before the other person. And oh man. Well, when you get toxicity, one lot's algos, think about if you were at that price and the people that just got filled there. Were you the one that was saying that we needed to do a market study on toxicity? Because I'm thinking that might be, you gave us that link and then I never did the programming involved with it, but I do want to get into that because I would really like to give myself, I think I understand what we mean by toxicity, and I totally get what you're saying where it's like, you're getting filled, but it's not a good thing. There's got to be a way to represent that to me with a number, because it can be hard to catch sometimes for me. But yeah. It always sucks when it's like, where it's like if you're on the edge and you think you have a good spot in line, like you're 1,000 and there's 3,000 on top of you, and then it ticks back up to you, and all 2,000 in front of you pulls, and then you get filled, and it's like, I got filled too easily. So pretend each price is you and you're trading both directions. I do think that sometimes. Think about both sides and how they got filled. Right. Well, so for me, when I get it like that, I think, okay, if I got filled, but they never actually ticked through me, that tends to be a good thing. But it's like it can do that and then tick down and then it tick back up and then all of a sudden they just sweep it, you know? Or you can be getting in at one of these prices here in the middle. That's why I think it's important to when these zippers form to realize on the DOM that the zipper is there. Because if you're getting filled in that zipper, then the way that you got filled doesn't really mean a thing. You know, it's balanced there and you could get filled buy or sell easily. And there's no way of knowing if these guys on the edges are going to pull or what's going to happen. I appreciate your trading thoughts. Lots of gems. Thanks. Well, even if somebody's not trading well, it doesn't mean you still can't learn something from watching them, even if that's just, seeing their mistakes. I'm sure that if you wanted to trade range bound, that what you could do is you could just sit and watch and say, okay, every time that Seth seems really excited to buy and he loses, I want to find out what it is about those spots and I want to go short. And you could probably do quite well. Anyways. Well, and don't do it from the January to March time period. All right. But anyways, I should let you guys go. So I will catch you guys tomorrow. And in the meantime, stay profitable.